Yo, how's it going, guys? Yuka here, welcome back to another video. Today, guys, we're going to see price action of today, Friday, and the trade that I took today as well. Very low risk, so yeah, first of all, let's go through the news. Let's get straight into it. Let's go to the news. Today we have NFP, so non-farm employment change, and this is usually like a big news, so we need to be careful on these days. So yeah, it was pre-market as well, so it is like a news that comes out and you see like, oh, let's see the impact it has on the market, and then from there you decide either you enter or not. So yeah, it was at 8:30. We usually trade from 9:30, so this was pre-market news. And yeah, what happened, I can show you guys as well. It was at 9. Yeah, it was right here, this up candle. Not a drastic move, so yeah, we still are able to trade. Let's start by reviewing everything. So first of all, we have let me hide these right here, boom. Okay, so first of all, we have our key levels for our lows, for our highs. We have our lows right here. We have nothing else really. Pre-market on Nasdaq, we go to the 1 hour. We have these 1 hour lows, market open right here. We have these hourly highs, and then that's basically it. We also have this hourly favorable gap and this hourly favorable gap, which we form pre-market. On the S&P 500, they have these hard lows, pretty similar. These hourly highs, which were going to be taken out, and we also have this hourly favorable gap. That's basically it. Let's go to 5 minutes, and let's talk a little bit more about what our bias was for the day. So yeah, basically, one thing we saw is that market opened, we sweep out these highs on the S&P 500, and we don't sweep it on the Nasdaq, so we are forming a bearish S&T. So for those who don't know, I'm always explaining this, but an S&T is basically when one index forms a higher low and the other index forms a higher high. So if you have highs stacked up and one index sweeps them out and the other doesn't, that's an S&T basically. That's when you form an S&T divergence. And what it means is, and I can explain this again, Nasdaq didn't sweep out these highs. What does it mean? Nasdaq does not want to sweep out these highs. He wants to go lower. S&P 500 swept out these highs, but Nasdaq is telling us, hey, we are going lower, so we want to go to the S&P 500 and see, okay, we want to go lower, so let's look for an entry. So again, this was very, very big news. Sorry, let me close this. This was news day. I wasn't really willing to trade. I had a good day on Wednesday. I had a good day on Thursday. So there was really no reason to give money back to the markets. So yeah, I wasn't really willing to trade, but I'm like, okay, if I'm trading, it's either A, to 5-minute strategy, so safer strategy, and B, it's like super low risk, which was what I entered today. So yeah, we are in 5 minutes. We are on the S&P 500 because that's where we formed the S&T. This is the lagging index. It's the index that is behind because Nasdaq is already making the move down. It's the leading index, and then the S&P is the lagging index. We want to take a trade on the lagging index, not on the leading one. What do we see? Price hits key level, it's already high. It's also 4-hour highs, I believe. So very strong draw on liquidity. Yeah, move up and move down, that's a high right here. Price hits also these highs, so it's sweeping out this liquidity. What do we want to see now? We want to see a reaction to the downside. To what? To target what? To a target fair value gap, to target other key levels. Basically, it can be a fair value gap, it can be lows, session lows, hourly lows, whatever it is. Because I'm not really confident on this trade, and because there's a lot of stuff going on the US, like a tweet, and the whole trade would have been gone. I wasn't really willing to trade and not willing to put much risk on the table. But yeah, okay, so what are you looking for now? You are looking for either a break of structure or an inverse fair value gap. And I'm like, looking at this price action, I'm like, maybe I'll trade, maybe I don't. 8 key level for an S&T. Now what I want to see really, because we already got the confirmation. We are either looking for A, price is key level, B, we are looking for a reverse fair value gap or break of structure, or an S&T that can also be used as a confirmation conflict. That's exactly what we use now. And now we need to wait for a retracement into some area of interest. What do we mark? Equilibrium, these highs up to these lows, right here, it's 5-minute lows. We see a retracement into it, this blue candle. We go to the 1 minute now. This is really fucking simple. The strategy is really fucking simple. I can tell you the strategy right now. Price hits key level. We wait for inverse fair value gap or break of structure on the 5 minutes or SMT. Then we try retracement into fair value gap, order block, breaker block, equilibrium, whatever it is, on the 5 minute as well. And then after watching this that retracement, we are going to do 1 minute, looking for a breakout structure on inverse fair value gap. That's so simple. Enter on that, stops above where trade idea is wrong, and take profits on next draws on liquidity and next key levels. It can be fair value gap, it can be equilibrium of fair value gap, it can be lows, whatever. This I'll explain right now the trade that I took, and I'll be completely honest with you. So this is a 5 minutes retrace we got. It's these legs up. Price comes down, and now we're waiting for a break of structure, and that's exactly what I waited for. We got a break of structure right here on this candle closure down, break of structure down. We enter on that. Stops where trading idea is wrong. You can put above these highs, or you can put above these highs. I put above these highs because there are relative equal highs, 1 minute highs. So it's safer. If price goes there, it means like price is not going down. Like price wants to go up. But if price, if I put here, it would have been much tighter, and I wasn't really happy with that because of also volatility and everything. Put a little bit safer. Safest will be like right here on these liquidity sweep highs. But hey, that's too high. I went a little bit lower, and that's exactly what I took the trade from. Price consolidated over a bit of time, like 10 minutes or whatever. Price moving horizontally, then we got a move. Price hits TP1, which was based on these 1 minute lows. Because again, and I wanted to see this fair value gap. I think it's a 5 minute fair value gap. I believe. I'm pretty sure it is. This is quite laggy. Whoa. Yeah, 5 minutes fair value gap to get invalidated, so that it will lead all of the take profits. It didn't, so we reversed on that actually, and that was my TP1. These on 1 minute lows. Again, if this was a normal day, I would only put my take profits on 5 minute lows. That's my strategy, on 5 minute lows. But because this was like really, I didn't want to trade, and really I just traded because I found a decent setup. I took it was 40% of my trade right here. And then the rest, and then put stop loss in break even, and what happened? Price retraces, and we got break even. We didn't make much money today. So yeah, I wasn't too worried that today wasn't a great day. We hit TP1, then break even, but I wasn't really willing to trade. I didn't really like price action, like price moving super horizontally. Not only that, I wasn't really going to willing to trade today, because Wednesday was good, Thursday was good, Monday and Tuesday were horrible, but we had 2 days of good price action, so I wasn't really worried about that. Then we took 40% of our trade right here, rest put to the break even, price hits break even. I was actually expecting this 1 minute fair value gap to get respected, but it didn't, so we got closed out, and I'm like, okay, I'm done for the day. I shouldn't even have traded in the first place. Like, I didn't even want to trade that day, but from a decent setup, so I entered with very, very low risk today because there was no need to put high risk on the table. And turns out price retraced into area of interest, swept out a little bit of 5 minute highs, and then boom, went down. It all take profits, but like look at this movement. Like, yeah, quite brutal the market today. It will have it. I'll take profits. I went to 2.33 risk to RR ratio, so not a bad trade. But yeah, we closed our profits right here. I could have just lied to you and tell, it did all take profits, like mega trade. No, I'm being real with you guys, and price hits TP1, reversed into break even, then it moved all into our direction. But really, decent day. Learned. What could I have done better? Targets 5 minute lows instead of 1 minute lows. But I know exactly why I took those 1 minute lows. I really didn't win these 5 minute lows as TP1, and that price would have become here, and then would have it all take profits, including these equal 5 minute lows, which are really strong, relative equal lows, which are very strong draw on liquidity, especially on these low time frames. Ideally, I would also like to see this equilibrium of 1 hour fair value gap getting filled, and price will have it, I'll take profits, whatever. It doesn't really matter, I'm not mad with myself that, I took partials too early or whatever. No, I wasn't really willing to trade. I didn't really like price action, but it wasn't too bad, it was a bit bad, but it wasn't too bad. So yeah, another day, a lot of people are complaining about price action. For me, it's getting better. Like, we have seen days which are completely horrible. I wasn't almost going to take this trade because it was right on macro close. My macro is from 9:50 to 10:10. I usually extend it from 9:50 to 10:30. it was right on 10-10, you know. So yeah, really, you know, decent trade, you know. Again, your goal here is not to make money every day. Your goal here is to predict where price wants to go every day, and I did that today. So, you know, the bias was correct. You know, I wanted to see like in the higher time frames, because we are bullish on the higher time frames, but we hit a key level. So I'm expecting. Sorry guys, this is really laggy. Computer is struggling right now. Yeah, we hit these key levels, you know, and I'm expecting some kind of retracement, because let me take my pencil out to show you guys. Like trends, you have to move up, you have to move down, move up, move down, move up, move down. So we did move up right here, you know, so I can draw it. What are you expecting? Move down, feel fair value gap, feel I don't know, equilibrium maybe, and then move up again. So yeah, that's really basically what I took the trade from, you know, like a retracement. That's why I was in low time frames as well. But not only that, normally I would target like this equilibrium and everything, but the price action was just so choppy that I'm like, okay, I'm done for the day, you know, low risk day as well, you know, and not too bad. So yeah, I won't complain about that. Yeah, just really, you know, a shame that we could have kept the trade going, but again, you know, like that was my plan for the day, very low risk. We have good trade days on Wednesday, good 10 days on Thursday. Hopefully next week we get some good trading days as well. Price has been a little bit choppy, but it's getting better. You know, I know for some people it's like still not ideal, but for me personally it's getting much better, because, you know, like if you saw like last week or 2 weeks ago, that was war. Like this is much better. It's getting better and better price action, and this isn't even ideal, you know. Like people complain about this, that being better price action, and for me it's like being good price action. You know, it's of course not perfect, but it's better than what we had, you know, on 2 weeks ago or something. And I think people sometimes they get used to very good price action and like, oh, this is good, and now when they get these mixed price actions, they either cannot trade and they are out, which is good, they are not losing money, or they either trading and forcing trades into the market and they are losing a lot of money, which is not great as well. So yeah, you know, being a good trader is not about taking trades every day. It's about, you know, again, really taking the best trades you can. You know, like the best traders in the world are taking like 8 trades per month, you know, and they're making a lot of money. Why? Because they are only taking the best trades, you know. Why do you think you need to trade every day when the best in the world are trading like 8 times per month, you know? Like, yeah, of course you need to watch markets every day so that you know where the opportunity comes or not, but definitely do not force yourself to take trades. And yeah, when you lose as well, you need to be okay with that, you know. Many people lose and they want to revenge trade and they go again and go again. Again, your goal for the day is to predict where price wants to go on a daily basis, not to gain money on the markets every day. Because if you put your goal to win money every single day, you are only going to leave the market when you win. And what's that going to make you do? You're going to over leverage, you're going to over risk, you're going to over trade, and you're going to lose other account. You're going to blow your account because you're going to lose, and that should not how you are. When you lose in the markets, you need to be okay with saying, I'm out, you know? Like, I'm done for the day. Journal it, of course, and learn from it, from your mistakes, so that you can identify patterns in your mistakes and improve on that. But from then on, you need to say, I'm out of the markets, you know? I lost, you know, okay. I'm going to learn from my mistakes, and this mistake cost me money for sure. But the money I lost on this trade, I'm never going to lose to this mistake I just made will make me much more money than what I lost today. That's really what you need to do, you know. And again, three trades this week, 3 good trades. It was really good, you know, and 3 high quality trades as well. So not this one, you know, not this one, but again, you know, if it was a normal day, no news, and this was the price action, it will have been a great trade, and I will probably hold it to equilibrium to follow my rules, you know. Take profit 1 would have been on these 5-minute lows only, and then take profit 2 very close to these, and take profit 3 all the way here. So 2.78, 72 risk reward ratio. Many people say, oh, that's not very good risk reward ratio on the trade. 1 to 10 risk reward ratio, bro. That's why you cannot pass your funded, bro. You are blowing accounts because your stop loss looks like this, man. Like, oh my god, I want to 7 risk reward ratio, bro. Come on, like. This is like a bit of over leveraging at this point, because, you know, you're putting such a small stop loss, you know, you'll get ticked out, you know. So yeah, you know, I prefer to be a little bit safer and more consistent than just putting like huge tiny stop loss, huge risk on the table. Like, yeah, for me today was a day like to get out of the market, so I lowered my risk heavily and I got in with very low risk, and on a safer trade took partials in take profit 1, which I wouldn't have taken, because I only take partials in at least 5-minute lows, not 1-minute lows. but you know, and this was also 5 minute fair value gap, which you know was why I took out some partials there. But hey, you know, not a bad day as well. You know, predicted where price wanted to go, not a bad trade. You know, and yeah, that's basically it. You know, yeah, make sure you guys like the video. Speak in the comments what you guys want to see next as well. You know, this is me. You know, very good trade. And yeah, that's basically it. You know, I think the video is long enough. So yeah, goodbye guys.